Welcome to the world's largest financial market, which is Forex trading. Whether you're a seasoned trader or just starting, that understanding Forex is your gateway to the financial freedom. But this video is not just for the traders, it's also applied for all the people who would like to have their career in the investment banking. So understanding how the Forex trading operates is a must, because Forex shapes global economic trends, influences business strategies, and also has a significant impact on any investment decision in the major corporations. From understanding currency pairs and also mastering some basic tools, I'm here to guide you every step of the way. And by the end of this video, you will not just have a knowledge, but you will have competitive edge that every employer in finance or in the bank are looking for. Imagine understanding the market trends with the confidence or impact informal decision that make significant impact on the businesses. This is why understanding Forex is more than skill. It's your stepping stone to the successful career in the finance and investment banking. And if you're new here, I'm business analyst, I'm working in investment banking, and I'm also MBA and CQ qualified. So Forex is the short from the foreign exchange, where people buying and selling currencies. It's one of the most largest and liquid market in the world, with a daily volume of over $6 trillion. Imagine that every day currency are worth trillions of dollars, which are traded around the world. Currency are traded in the pairs. For example, US dollars versus euro or Japanese yen against British pounds. When you trade Forex, you essentially buying one currency and simultaneously selling another. Let's say you're trading Euro-USD pair and you believe that euro will become stronger against the dollar. So you might buy euro and sell dollars. And if the euro indeed rise in relatively to the dollar, then you can sell it later for a profit. So how the Forex market actually works? If we know that stock market, they are actually operates through centralized exchanges like New York Stock Exchange, then the Forex market actually decentralized. It means that there is no single physical location where all trades happen. Instead, the Forex is traded over the counter or OTC, which means the trading happening electronically between participants around the world. Forex markets are open 24 hours a day and also 5 days a week, which allows you to trade from Monday to Friday constantly. This is because Forex trading operates across major financial places like London, New York, Sydney, Tokyo. And when one market closes, then another open, which keeps trading constantly open. So let's look now in the currency pairs details. As I mentioned already before, Forex trading involves buying and selling currency in pairs. So the most traded currency in the pairs coming from the large economies like US, UK, Eurozone, Japan. An example can include Euro-USD, GBP-USD or JPY-USD. So the previous examples we can call a major pairs. When we talk about the minor pairs, they will not include USD, but instead they will include other major currency like Euro or Japanese yen. An example can be Euro-GBP. Then we have also exotic pairs, which are made from the currency from emerging markets, for example, South Africa, Mexico. So what is the role of the broker in the Forex trading? So when trader they want to buy or sell currency, they can't just go to the market. They need a broker who actually give them access to the trading platforms where they can execute buy or sell orders. Brokers also offer leveraging, which means you can trade with the more money compared to actually what you have. For example, if you have 1,000 and a broker offer leverage 1 to 20, it means that you can trade with the 20,000. While leveraging can increase profit, but at the same time, it can significantly decrease it. So it's important to use it very wisely. Let's say you use 1 to 20 leverage on $20,000 to trade currency. And exchange rate moves in your favor by 1%. It means that you will make $200. But if the market moved against you by 1%, then you would lose $200. Let's talk now how to read Forex quotes. If you ever seen the Forex trading platform, that you would have noticed this type of the quote. where Euro USD equal to 120. But what does it mean? As I mentioned already in the past, so the first currency we have Euro, which is our base currency, USD is our quote currency, which means that we need 1.2 of the dollar, which is our quoted currency, to buy 1 unit of the euro, which is our base currency. So as you can see, 1 euro is the equivalent to the 1.2 US dollars. And if the exchange rates go up to 1.3, it shows how the euro has strengthened against the dollar. And if it drops, for example, to 1.1, it shows that value of euro decreasing. Let's talk now about which factor actually influence the currency pair. Just like stock prices fluctuate from the company performance, the same currency pairs they are changing because of various factors. And here are some of the most important factors that influence currency prices. Interest rate. So countries with the higher interest rate, they usually attract more investors, which is drive demand of their currency. For example, if the European Central Bank, they raise the interest rate, but in the meantime, US Federal Reserve, they will keep the interest rate the same, in this scenario, euro can get stronger against the dollar. Another factor that influences currency prices can be economic data. Here we can look as example of the reports like gross domestic product or GDP, employment numbers or inflation rates, which is significantly all of them together, they can influence the currency prices. Positive economic data can easily boost the value of the domestic currency, while weak data can cause to drop it. The next factor can be geopolitical events. For example, political stability or election can also cause currency prices to fall or rise. For example, during Brexit negotiation, British pounds saw significant volatility because investors they were reacting to the political news. Let's say US today released the job report which shows that unemployment rates significantly decrease. So this is a sign of growing economy, so investor might start to buy US dollars. So this will cause the USD dollar to grow in their value against other currency like Euro USD. On the other hand, if there is some political instability in the country, for example, election going on, so investor might start selling that country's currency, worrying about instability in the economy. This happened during 2016 US election, when USD dollar was seeing sharp movements based on the political events. So to conclude here, the Forex market, it's very fast moving environments where traders, they buy and sell currency across all the world from Monday to Friday and 24 hours a day. It's a market which is driven by global political events, economic data, interest rate, and also offering a lot of opportunities to the short-term traders or long-term investors. And don't forget, the Forex trading, like any other tradings, it can be very rewarding but also very risky. So if you enjoyed today's video, you might also like this one, and don't forget to subscribe if you haven't yet. And thank you very much for watching me, and see you in the next video.